HST system in Canada. How does it work? What are the rules that we as business owners should follow? How to approach it, and where possible, how to benefit from it. Hi and welcome back again, me Eugene from CBS, Canadian Business and Enterprise Services. And today, two disclaimers. One, regular, I'm not a professional CPA, so the purpose of today's presentation is just an information, simplified presentation of the system for you, an attempt to show you where to pay attention and how to get prepared to it. And another one specific for today's presentation, the system is extremely complicated. In Canada, they overcomplicated it for us and we have to live with it, but that as well affects the presentation today. That might seem a little bit too harsh for you, but I apologize. That's the system that I try to introduce and explain. So HST in Canada is what we know in other countries as value added tax, or VAT. It's just combined from different parts. We have GST, which is goods and sales tax, operated by federal government, and then we have PST or QST in Quebec, which is a provincial portion of sales tax, and then some provinces combined together and created HST in an attempt to create unified system, which they failed to do and complicated it ever again. In today's presentation, I will be talking about HST since I'm located in Ontario, and that is one of the HST groups of provinces, but the system is very similar and the logic is absolutely the same in any other provinces. So let's start. What is and how much is the HST? So the federal portion of GST, goods and sales tax, consists of 5%, and it's same for every other provinces. Then the portion of PST or provincial sales tax could change from 0 like in Alberta, where you pay only 5% GST, all the way up to 10% or almost 10% like in Quebec, where you will be paying close to 15% of QST. And then there's the HST system, which is originally was supposed to be 13% across the board, and then the provinces continue to overcomplicate it even more. So here's the partial table of different provinces and their rates. You can see that Alberta represents 5%, Ontario 13%, and New Brunswick, which is supposedly an HST province, is 15%. Quebec is close to 15% as well. Now, at this point, it is important for us as business owners to understand that the system is working on the presumption of where the goods or services were sold. So it doesn't really matter where you're located. The question for HST application is where your goods were sold. So if you're located in Ontario, but you were selling your goods in Alberta, you have to talk to your accountant to understand which rate of HST or GST to apply to that sale. Taxable supplies. What are taxable supplies and to which the system would apply? First of all, most of the products and services sold in Canada are covered by this or other type of HST. Then there is a exempt, and this is a small group of products which are exempt from the HST system. And what it means is that the businesses offering those products and services do not participate in HST at all. They're outside of HST system, and I'll show the implication of this in today's video. I'll show you how the numbers sum up in the situation of business exempt from HST, or as a third group of products and services, those are zero rated HST. So there are two groups of them. One is a small group of products and services being offered in Canada, such as medicals, groceries, farm produce, drugs. And the other one are the products and services being sold outside of Canada, export businesses, where they charge technically 0% HST on top of their price. We as a business owners, when should we register, at which point, and how to navigate the registration? So there is a mandatory requirement for every single business that offers regular products to register for HST as soon as the business reaches $30,000 of sales per any given 12 months or quarter. So as soon as you reached within that period of time $30,000, you have to register, and from then on you always collect HST even if your sales fall. But if you sell less than $30,000 per year, then you don't have to register for HST and you can issue invoices without adding the 13% HST tax to it. The effective date of registration from the CRA perspective is when you reach $30,000 and you have 1 month to register. And what it means is that if you forgot to register, you failed to register, you didn't know that you're supposed to register, from the government's perspective, it doesn't matter. You became a part of the system as soon as you crossed $30,000, and from that point on, every sale that your business generated technically includes those 13%. So the government will come back, will demand back those 13% plus penalty plus interest, so please pay attention and register in time. Then there is a voluntary registration, and voluntary registration allows for businesses offering regular products and services to register as soon as you want, and I'll explain in a moment why would you want in certain situations to register voluntarily for GST HST system. The rules, as I said, apply to all the taxable supplies, which are most of the products and services sold in Canada. All you have to do is call either CRA or to your accountant and ask if what you sell is covered by HST rules. You'll get the answer within 2 minutes. Who's responsible to pay and collect the HST? Only those businesses that registered for HST can collect HST. So if you get an invoice with HST on top of the price, it means that the seller is registered for the HST system. Then the sellers who are registered for HST, they also must collect HST. It's not optional. You cannot decide not to collect HST on certain products and do collect them on others. And what it means also that if there is a transaction that goes through and in that transaction the seller didn't collect HST for whatever reason, it's not buyer's problem. It's always the problem of the seller, and the seller will have to pay 13% of that transaction to the government as a portion of collected HST. Now, many of you can ask, so what does it mean when we see online or in the store a discount of the type that says buy this and that and get HST on us? The meaning of that discount is that technically if in a regular sale you would buy something for $100, you would be paying $113, which is 13% HST added. In the case of that discount, you will be buying a product for $100. And although you think that you saved yourself 13%, this is not exactly the calculation that the government works with, and logic as well. So what it means from the business perspective is that you just sold something that includes 13% of HST for $100, which means the product costs about $88.5, and the price included 13%, which is additional $11.5 of HST, which means about 11.5% discount. That is as much as you get when you buy products under HSTs on us discount. How does the system work from the technical perspective? So HST registrants collect HST, as I said, on all HST supplies. All collected HST must be reported to the CRA. We collect this money on behalf of the government. It never becomes our money. We just keep it in trust for the government and we refund it at the end of the reporting period. At the same time, once we become the participants of the HST system, we start also calculating the HST that we paid on the products and services that we purchased. And at the end of the day, we have to balance the HST that was collected against the HST that was paid, and if we paid more HST than collected, we get the refund. And the vice versa, if we collected more HST than we paid, we have to pay the remainder to the government because that's not our money. And this is the point when I want to get back and talk about why does it make sense in certain situations to register early for the HST system as a voluntary registration. So let's say in an example of a restaurant, and you can see in one of my videos, I already spoke about it, you start a business. At the initial stage of that business, you will be investing a lot of money into renovation, leasehold improvements, lease itself that you pay, purchase of equipment, purchase of materials, everything you need to start the operations of the restaurant. During that time, you usually do not sell anything. You never got to $30,000, you didn't even have a chance, you didn't start your business yet. At that same time, but you already spent dozens and sometimes hundreds of thousands of dollars of expenses. If you did not register as voluntary registration for HST, all those HST 13% that you paid in addition to the purchase of services and products to start your business, you lost them. You weren't part of the program, and that means you are not entitled for the input tax credits. On the other side, if you did that step after you consulted your accountant and you registered for the HST in advance, you can get a very nice refund at the end of the year or your reporting period, whatever you choose. Because you were only overpaying HST, you never collected any HST, so that portion should be paid back to you. So if you intend to start a business with large investment, talk to your accountant, see if it makes sense to register for the HST in advance voluntarily. Let's continue with the rules. So upon collection of the HST, a seller must provide you with their HST number. And the HST number, just as any other business number, will consist of 9 digits, RT, which is the HST group. And remember, you can watch my video, the link is in description, about specifically business numbers. And what is important is that you as a payer, especially if we're talking about large amounts, you can go and verify whether the seller is actually registered, is allowed and authorized to collect that HST, that the HST will go to the government and not will be collected illegally by someone who is not a part of the system. The link to the verification is in the description below. It's an official government website where you provide the date of transaction, name of the business number that you were provided by the seller, and the government will tell you in real time whether the business is registered for HST on the date of transaction. Almost everybody pays HST, so if there are certain exceptions, talk to your accountant, but in Canada, anyone who buys a product that comes with HST, they cannot ask not to pay HST. And now let's talk for a very short period of time about the difference between zero-rated and exempt HST companies. So zero-rated HST business means that the business actually charges HST just 0%. So when we sell overseas, we do not charge our clients 13%, just as anywhere else, duty-free. So we add 0% HST, but to work on the right side, you should include in your invoice the line for the HST. You just say it's 0%, you add $0, and the price doesn't change. On the other side is the exempt business, and the exempt business doesn't participate in the HST at all. They're not authorized to sell with HST. They are not part of the system. What it means is that zero-rated, on certain situations when you sell your zero-rated products in Canada, you might collect HST, or you might sell different products. Some of them are zero-rated, others 13% regular-rated, and again you will be collecting HST. The exempt, they do not collect HST at all. Now, on the financial side, the difference would be very substantial. So in an example where during a reporting period you have collected $100,000 of revenues, what it would mean is that the regular business technically received $113,000, HST added 13%. Both exempt and zero-rated would collect only $100,000. They do not collect the HST on top of their sales. Let's say during the same period of time you spent $80,000 to generate your sales, purchase of materials, services, goods, etc. Which means every single of those three businesses paid $80,000 plus $10,400 of 13% HST, in total $90,400. All three businesses paid. And what it means is that before the HST calculation and reporting, the regular business would have collected $22,600, which is the difference between sales and the expenses, while exempt and zero-rated will have on hand only $9,600. At the next step, each of first and the third businesses will be reporting the HST and either paying back to the government over collection or claiming the credit for overpayment of HST. The first regular business collected more HST than it paid, which means that it will pay $2,600 of HST back to the government. The exempt business is outside of this system, doesn't report anything, doesn't participate in it, just stays as it is with $9,600 of cash on hand. At the same time, the zero-rated business will report overpayment of $10,400 of HST, because that's what it paid for the purchase of services and goods while not collecting anything at all. All its sales were zero-rated sales, and will claim the credit back, which means it will get back at the end of the reporting period $10,400 from the government, ending with both the regular and HST zero-rated businesses having on hand $20,000 of profit. At the same time, the exempt business will end up receiving only $9,600 and losing those $10,400 of HST. This is the main difference, and that's why it's important for us to understand to which group we fall. What are the reporting rules? Reporting frequency depends on the volume of our sales. If it's less than $1.5 million, we would be reporting once a year. If it's less than $6 million, we will be reporting quarterly, and more than $6 million, we report monthly. At the same time, we can always increase the frequency of reporting if we want to. We cannot reduce it. So once you cross $6 million of sales per year, you cannot report less frequently than every quarter. But if you sell, let's say, $100,000 per year, you still can report every month if you want, if you need it. Now, as business owners, we should keep in mind that there are always special circumstances that might affect the situation of HST, collection of HST, payment of HST, how it applies, and when do we pay it. I won't explain everything, but I will just give you a list here that you can use, and when you approach one of these situations, talk to your accountant before you start processing the transaction. So purchase of a business, there are different HST applicable to that, especially when a business is being purchased and sold by a corporation, both of which are HST registered. They can avoid paying HST. Then there's purchase of assets, the same situation. Purchase of capital property for mixed personal and business use. There, the HST will apply to one and not apply to the other type. Again, talk to your accountant, see how the proportion will be calculated. Overseas supplies, that's the zero-rated most of the businesses. Shares transaction, real estate transaction, and some others. So every time that you approach transactions which are not your regular business operations, that you are not already familiar with, go to your accountant, ask how will HST work with it. Always do it, because 13%, if you did not collect it or you misappropriated, the government will collect those 13%, just will recalculate your sales price as if it includes the 13%. So what are benefits and drawbacks? Just a little summary of today's presentation. When we get, as business owners, the portion of HST, many business owners, especially at the initial stages of their operations, consider it as their money. They will overspend because while selling for, in my previous example, $100,000, we received $113,000. We might overspend all $113,000, ending up owing to pay, in the same example, $2,000 to the government without having that cash on hand. So this can very much harm our cash flow. When we start our operations, we should remember and calculate and consider voluntary registration in expectation of HST refunds at the end of the year, especially before we started our operations, or if we expect that the business will start losing money for a certain period of time, then it makes sense, because we technically will be selling less than we're purchasing. We might get refunds from the HST. Sometimes those refunds will be able to balance out our financial situation. Although you should keep in mind that participating in HST adds the additional reporting responsibilities, and it will cost a little bit more to work with your accountant. And the last one, when there's large HST or ITC, the credit refund claims, the government will come to audit your operations. They will want to make sure that your claims are justified and in accordance with the rules of the HST. So be prepared, and if you see that your business starts generating large HST refund claims, make sure that all the documents are in proper order, as usual, of course, and you're prepared to accommodate the audit from resource, professional, and document side. So this is a short overview of the system that we work with. I hope that this clarifies to you the situation at least a little bit. I will be glad to answer any questions that you will have and that I will be able to answer. And as usual, subscribe if you like this video, so many people can find it and enjoy the same content if it's enjoyable at all. And let me know if you would like me to cover some additional topics. I will try to accommodate and prepare the videos in the future. Thank you for being with me today. Again, Eugene from CBS, Canadian Business and Enterprise Services, and I'll do my best to come up with new videos. Bye bye.